Welcome back. Like we've been telling you, cues across Asia are fairly mixed. Several markets are shut. The ones that are open, the big one, Japan is down about 0.6%. Hong Kong markets are actually slightly higher. The implied open is suggesting a really weak start. So let's see if the bulls can buck that or not. Well, we have plenty of stocks to go over, lots of earnings over the weekend. So let's straight away get to it. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, hi, morning to all of you. Let's start with the big bank number first. Abhishek, ICICI Bank, how does it look?
Well, it was a mixed set of earnings coming in from ICICI Bank. Their business momentum continued to weaken. However, the return ratios, especially the ROA, has remained steady, unlike peers which have seen a decline. So to begin with, what's worked is that the gross NPA ratio is one of the lowest in last 10 years or even more for ICICI Bank. Core operating profit growth is around 13% on a YY basis, which is one of the best that you are seeing in last 5 quarters. The return ratios, that is ROA, has remained steady at about 2.4% plus minus 5 basis points for now 4 to 5 quarters in a row. International net interest margin is at 4-quarter high for them, coming in at 1.3 versus 1.2% in the previous quarter. Now, what's not worked is that the business momentum has slowed down in line with what you are seeing in the industry as well. Deposit growth of 14% YOY is one of the lowest that you are seeing in last 7 quarters. Loan growth less than 14% YOY is one of the lowest that you are seeing in last 15 quarters. Retail loan growth is the culprit over here. It's grown by just 9.4% YOY, one of the lowest growth with respect to YOY in last 9 quarters, and perhaps for the first time in single digits in last 9 quarters as well. Quarterly slippages of 6,000 odd crores is one of the highest that you are seeing in last 14 quarters, and this is also on account of agri portfolio. Domestic net interest margin as a result of higher slippages has come in at 10-quarter low of 4.32% versus 4.34%. With respect to the PNL, the NII is below our poll. However, the PAT is ahead of our poll. Valuations should augur well for stock movement in trade today. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. I'm looking at JSW Steel. In a difficult quarter, they seem to have performed pretty okay. How did that happen? Well, because steel prices, the fall was less than expected. And the fall in input costs or raw material was higher than expected. So that's why, in fact, these numbers looked actually a little bit better. Revenue a little bit better. The EBITDA number was a little bit better. And the crucial number that we look at is the standalone EBITDA per ton. And that's a calculated number. That as well was a little bit better than what we were working with. You had the power and fuel cost. Out there was some kind of leeway because the management had said they are guiding for coking coal costs to drop by $20-25 per ton. It dropped by around $34 per ton. And they're saying for the next quarter as well, it will drop by around $10 to around $15. So that's good news. Moving to their subsidiaries, well, from Bhushan Power and Steel, that's the acquired asset. It did well. On a sequential basis, you can see there's a bit of an improvement out there. Even on JSW coated steel, out there as well on a sequential basis, there's a bit of an improvement. So both these two assets did well. The problem was in the overseas operations, and the US business reported a larger than expected loss. In fact, the loss was at around 150 crores, the US operations net loss for the past quarter. So that was a bit of a drag. Debt came down as well, which is another positive because of release of working capital. I expect a bit of a positive reaction because there's optimism. There'll be some duties that will be imposed on imports. And also for quarter 4, there should be an improvement of around 1,500 to around 2,000 rupees per ton. So that's why going with green on this one.
Okay, absolutely. And just a reminder, of course, at 9:40, you can hear more from the management. Mr. Jayant Acharya is going to be with us to detail the outlook ahead for the company. Let's get on to Vivek then. One more nifty company to look at. NTPC. Vivek, how are the numbers?
Well, good morning. Slightly subdued set of numbers as far as NTPC is concerned. And the main worry remains the fact that the company has not been able to go ahead and achieve the capacity addition as per what their stated guidance was, implying a very steep ask rate as far as Q4 is concerned. Now, talking about the actual numbers themselves on a standalone basis, revenues higher by close to 5% on a year-on-year basis, slightly below our poll. However, when you're talking about the EBITDA came in quite strong, almost 20% higher, coming in close to the 11,960 crore mark. Margins coming in very healthy at 28.9%. Profitability higher by close to 3.1%. However, remember, profitability looks subdued growth. This on the back of the fact that the base quarter had a one-time income tax refund income. Finance costs have cooled off quite significantly, down 21% on a year-on-year basis. Now, talking about the group generation, slightly subdued, just 2% higher on a year-on-year basis. However, what is it that the company said as far as the conference call is concerned? They have reiterated their target of capacity addition. So 5 gigawatt of capacity addition in FY25, 7 gigawatt in FY26, 10 gigawatt in FY27. But talking about FY25, till Q3, there was just 0.3 gigawatt that was added. 0.7 gigawatt has been added in January. So in the remaining 2 months, they will need to go ahead and add another 4 gigawatt, implying a very steep ask rate. Expect some red in NTPC today.
Okay, all right. Thanks a lot for that, Vivek. Hopping across to Manglam, who's here to tell us about Godrej Consumer. Manglam, take it away.
Well, Godrej consumer results were weak, but they weren't much weaker than what the company had informed the analysts already in their pre-quarter update. So it's in line with muted expectations. Year on year, the revenues of the company have grown just about 3% with the EBITDA falling about 10% because of the sharp inflation that we've seen in palm oil prices. Net profit as a result of which down by 14%. Were analysts expecting that? Largely, because if you look at it, versus our poll, the revenues have come in at around 3768 crores, largely in line. The EBITDA 756 crores, the street was working with a number of 757 crores as well. And the net profit just shy of 500 crores, the street was working with a number of close to around 529 odd crores as well. Domestic volume growth absolutely flat as expected itself. And the stock is priced at in. It's down about 27% from its highs, trading at around 46 times. So for starters, the stock opens in the red. But remember, from the peak, palm oil prices have come off. And this quarter, along with the union budget, has kept all the FMCG stocks in, some sort of lofty mood from a street standpoint. So will that dip be bought into in Godrej Consumer or not is the big question that we'll get an answer to today.
All right, Manglam, thanks a lot for that. Well, let's focus on JK Cement. Actually, in another difficult quarter for the cement industry, they've reported pretty good numbers. The EBITDA number, actually, the absolute number is 7% better than what Motilal Oswal was working with. So on the top line, there was a flattish number, but sales volumes were up by close to around 5%. And on a sequential basis, you had grey cement volumes that were up by close to around 13%. So the street will like that. The operating profit, yes, it was a little bit lower, but actually it was better than what the street was working with. And the next chart will actually tell you the real picture out there, because the margin improvements on a sequential basis is quite good. From around 11%, they bounced back to around 17%. And in EBITDA per ton from around 650 rupees, it's bounced back to 4 digits yet again. So the street will like that. And the key reason is the power and fuel costs have come down by close to around 15% or thereabouts. So going by these numbers, in a quarter that wasn't that great and have optimism about quarter 4, I expect the stock to react well in the green in today's trading session. But Abhishek has had a very, very busy weekend. He's tracking a few more numbers. Abhishek, IDFC First Pack and CreditAccess Grameen. That could be the stock of the day on the downside.
Well, yes, Credit could be the stock of the day with respect to downside. For the second quarter in a row, they have revised their guidance. And MFI is the main concern amongst both these lenders, which has caused pain in the PNL. So IDFC First Bank, the numbers are below pole. Both the ANA and PAT is below pole. And that is on account of the fact that slippage ratio is one of the highest that you are seeing in last 11 quarters. It has come in at 3.9% versus 3.7% in the previous quarter. The retail asset quality has seen deterioration as well. Gross NPA ratio has inched up by 6 basis points. Cost to income ratio that has deteriorated and is one of the worst in last 11 quarters. If you in last 10 quarters, with cost to income ratio at 73.7%. Net interest margin on account of elevated stress has come in at 9-quarter low of 6.04%. Overall, it has impacted the return ratios as well. ROA continues to be weak at 0.4% versus 0.25% in the previous quarter. The risk in the balance sheet has increased, so risk weight asset to advances ratio is at 14-quarter high of 119.5% versus 117% in the previous quarter. CreditAccess, the MFI pain has led to net loss for the first time in last many quarters. FY25 guidance by them has been revised for second time in this year. So they have revised FY25 guidance of loan growth to about 7 to 8% now from 23-24% that they had given at the beginning of the year. Credit cost has been increased as well to 6.7 to 6.9% from about 2 to 2.5% that they had given at the beginning of the year. AUM growth is weak over here, just 6% YOY and a decline of 1.3% quarter on quarter. They have reported loss versus PAT of 353 crore same quarter last year and about 186 crore in the previous quarter. The write-offs are at 377 crores, so gross NPA and net NPA have inched up by 63% and close to 68% sequentially. So gross NPA ratio and net NPA ratio both have inched up as well on a sequential basis, which could weigh on the stock price today. Back to you.
All right, this is going to be interesting, all the financial company earnings. Abhishek, thank you very much for that. You'll hear from the IDFC First management, so they'll be with us at 9:50 to talk about their third quarter numbers. Vaidyanathan, as always. Well, let's go across to Vinny now. Indigo reported numbers as well. Vinny, good morning.
Good morning. So in terms of numbers from Interglobe Aviation, revenue came in line with estimates, but the profits of the company, that saw a decline this time versus what we were expecting at CNBC-TV18. Now, that was mainly because of the higher forex loss that one actually came in for the company. 1,458 crores was the forex loss. So adjusting that, overall then the margins as well as the profitability of the company is in line with what the street was estimating. Now, yields of the company that have also remained quite flattish, but the passenger load factor, that's a good number coming in at around 86.9%. Fuel costs, they are down by around 6% for the company. Management has spoken about how Q3 has seen robust demand. And for Q4, they've guided a good 20% YOY growth in terms of guidance for the available seat per kilometer. Forex losses is something they highlighted that impacted the net earnings of the company. So all in all, it's a decent number that's coming from Interglobe Aviation. Brokerages are also maintaining their guidance and their rating for the company. So we're expecting a bit of a green year for the stock.
All right, Vinny, you know, Chris Martin over the weekend said, why isn't Vinny here in Ahmedabad for the concert? I said, because she's got too many numbers. After Mumbai as well as the Middle East, Vinny skipped Ahmedabad because you had a lot of numbers, Vinny. Torrent Pharma and DLF, tell us how those numbers were.
Absolutely. So I did go to Ahmedabad, but yes, surely talking about a company that's coming from Gujarat, Torrent Pharma. That side, when you look at it in terms of numbers, earnings were slightly below the estimates, though they saw a very strong growth coming in the domestic business. Revenue of the company saw a growth of 2 to 3% on a year-on-year basis. Margins are seeing a bit of an expansion. US business, that was the concern coming in. So US business is something that is yet to revive. So we're expecting a bit of a subdued move today coming in from Torrent Pharma. India business, good growth. US subdued growth. Germany also saw a slight bit of an increase, but Brazil was down because of the currency issues. So keep an eye out on Torrent Pharma on the back of its numbers. We could see a bit of red, I beg your pardon. While in terms of DLF, we are expecting green coming in for the stock today. Strong numbers coming in. Pre-sales were quite good for the company. Highest pre-sales that they've seen coming in during, in the last few years. Strong response that they saw for the newly launched Uber luxury project of that. Theirs collection was seeing a strong growth of around 23%, and overall, even the rental side of the business has seen a very strong growth. So good numbers coming in from DLF, and we're expecting green.
Okay, all right. Got that, Vinny. Thanks very much. Let's quickly move on. In fact, before we move on, Torrent Pharma's management is going to be joining us at 9:30 a.m. So just a quick reminder, Mr. Sudhir Menon will talk about the performance and the outlook ahead. Lots and lots of numbers. Let's quickly recap our stock list for the morning. It's ICICI Bank, JSW Steel, Interglobe Aviation, Godrej Consumer, DLF and JK Cement. All of those on the back of positive news flow. NTPC, IDFC First Bank, CreditAccess, Grameen and Torrent Pharma are stocks on the radar that could open out on the negative side. So let's watch out for this. But beyond